You just got a raise. $10,000 more per year. That's about $200 every single week hitting your account. You feel it immediately, a sense of relief, validation, maybe even excitement. Finally, you think, I can breathe a little easier. But here's what most people don't realize. That raise is about to disappear. Not all at once, gradually, invisibly. By the time the year ends, you'll have spent nearly 40% of it before a single dollar compounds into wealth. This is the hidden tax that destroys generational wealth before it starts. It's called lifestyle creep, and it's hunting you right now. Let me show you how it works. When you earn more money, your brain doesn't register the raise as abstract income. It feels it as permission to upgrade. Your apartment was fine when you made $50,000 a year, but now at $60,000, you start noticing the inconveniences. The building's older, the neighborhood's okay, but wouldn't a place near the water be nicer? You find a new apartment. $300 more per month. That's $3,600 a year. You've just locked in a fixed obligation that will grow when rents increase. Your raise is already half gone, and you haven't bought anything yet. But lifestyle creep doesn't stop at housing. It moves through your entire life like water finding cracks. You're driving a reliable sedan, nothing wrong with it. But your colleague parks a German luxury car in the lot. It's beautiful, engineered. The leather interior alone feels like silk against your skin. You start researching financing. The monthly payment is higher than you expected, but you've earned it, right? You negotiate a deal. Now you're locked into $500 a month for the next 6 years. That's another $6,000 a year gone. Your raise is nearly spent, and you haven't even noticed the transition. Then comes the wardrobe. Your old clothes work fine, but success should look like something. You invest in tailored blazers, Italian leather shoes, watches that whisper rather than shout their worth. These pieces cost money, not extravagant amounts individually, but cumulatively they add up. $200 here, $400 there, $1,000 in a single season. Your raise is completely consumed. Every penny of that $200 weekly is now allocated before you ever see it compound. And here's the cruel part. You can't easily reverse it. You can't move to a cheaper apartment without feeling like you failed. You can't downgrade to a used car without feeling diminished. These upgrades have become your identity, and identity is hard to shed. This is the difference between looking rich and being rich. Looking rich means everyone sees your success immediately. The apartment, the car, the clothes, the restaurants, they're all visible status signals. You're performing wealth for an audience that doesn't care and doesn't pay your bills. But being rich, true financial strength, looks completely different. It looks boring. It looks like delayed gratification, compounded over decades. It looks like a person in a navy blazer who could afford to wear 10 more, but doesn't, because that money is working for them instead of working against them. Quiet wealth is the person who still drives the reliable sedan, the one they've had for 12 years, because they understand something most people don't. Every dollar spent on lifestyle is a dollar that stops working for you. That $10,000 raise could generate $400 in returns annually if invested properly. Over 30 years, with compound interest, that single raise could become $200,000. But if you spend it on lifestyle upgrades, it becomes zero, literally nothing. You've converted future financial freedom into present status signals. The mechanism is simple but devastating. When you upgrade your lifestyle, you're not just spending money once. You're creating a permanent increase in your baseline expenses. That apartment costs more forever. That car depreciates while you keep making payments. Those clothes wear out and need replacing at a higher price point. You've essentially raised your fixed obligations to match your new income, which means the next raise will be consumed by the next upgrade. You're on a treadmill that only moves faster, never forward. And if you ever face a job loss or income disruption, you're in crisis mode immediately because you have no margin between earnings and expenses. The truly wealthy people you know, the ones with real generational money, They understand this principle deeply. They know that lifestyle is a tax on wealth building, so they practice what looks like restraint but is actually radical clarity. They delay gratification not because they can't afford it, but because they understand opportunity cost. They invest their raises before they feel them. They automate wealth building so the money moves to investments before they're tempted to spend it. They know that compound interest is the eighth wonder of the world, and every dollar left to grow today is worth multiples tomorrow. If you want to break this pattern, you need to reverse the sequence. Don't let your lifestyle rise with your income. Let your investments rise instead. Take your next raise and commit 70% of it to investments before you touch anything else. Put it somewhere you can't easily access. Let it compound. Your lifestyle doesn't need to change. In fact, it shouldn't. The person you are today is someone who successfully earned a raise. But the truly wealthy have learned to break that chain. They earn more and live the same, letting the difference compound into real freedom. That's quiet wealth. If this resonates, please like and subscribe. We're here for people ready to build generational wealth.